Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk this afternoon at the Nasdaq market site, we have Andy Baehr, Managing Director at CoinDesk Indices, as well as Tal Zackon, co-founder and CEO of Trace Finance, and Chris Maurice, CEO of Yellow Card. We're here to discuss the intersection of crypto and taxes and how crypto is being used from a global perspective. It is great to have you all with us. Welcome to Trade Talks. Let's go around the horn here quickly. Andy, starting with you. Just give us a brief introduction in terms of where you sit within the digital asset ecosystem.
Sure. CoinDesk Indices is the largest and oldest digital asset index company. We oversee tens of billions of assets that reference our prices. And we have Bitcoin price indices. We have the CoinDesk 20, which is an introduction to the asset class, and we have systematic strategies. So we're part of CoinDesk, the media and events company.
All right, and Tal, based out of Tel Aviv, all the way to New York.
Right. Yeah, so Trace Finance, we started the company 2 years ago. The goal is to simplify Web3 financial operations for enterprises. So anything that's got to do with accounting, reporting, audit. Yeah, it's great to be here.
All right, and Chris, you're kind of everywhere.
A little bit. Yeah, Yellow Card is the largest and only licensed stablecoin on and off ramp on the African continent. So we work in 20 countries, all in sub-Saharan Africa, and make it easy for businesses to make international payments, manage their treasury, all through stablecoins.
Let's talk more about that, some of the use cases for digital assets in Africa, showcasing that their practical benefits. And it's not like just Africa, there's other parts of the world that are growing local economies leveraging digital assets. Tell us about that versus some of the use cases in the West.
Yeah, a lot of other parts of the world, but Africa is the most fun. But yeah, I think when you look at digital assets and the way that they've been used in the U.S. and Europe and even parts of Asia, right? It's very speculative, right? It's people are buying Bitcoin because they want the price to go up. It's not I have a credit card that works. I have a bank account that works. I can make international payments. I can move money around the world as needed with my U.S. account. For most people around the world, that's not an option, right? If I have a bank account in most countries on the African continent, I don't have access to the US dollar, which means I can't make international payments. And even if I can get the dollar, it's very difficult to actually be able to move it in a way that is useful to me to facilitate imports, to actually keep my business afloat. And so stable coins are what a lot of businesses around the world, and especially in Africa, have turned to actually help manage that treasury and manage that risk for local currency.
Yeah, and Tal, it's really interesting because we tend to think very U.S. or Western European centric because we have central bank infrastructure in place, to Chris's point. But the fact of the matter is, there's a billion, maybe a couple billion people who are growing local economies, finding alternative forms of capital raise available through the digital asset ecosystem.
Oh, for sure. I mean, I'm actually a native to Africa. I was born in South Africa. If you think about what's happening with the local currencies in some of these places, it only makes sense that if you can move it on-chain, no one can actually manage it, right? It's totally distributed, and then you can really hedge yourself against the local currency, so it only makes sense.
Yeah, I mean, because we certainly don't experience the currency fluctuations or inflation fluctuations that you see in other parts of the world as well. Yeah, so I also want to talk about the intersection of taxes and crypto. Why is that a challenge? Is it because the regulation isn't consistent or there's no global standard for it?
Yeah, I mean, this is one of the most controversial topics, right? People are always like, what's happening with my taxes? How do I handle this? I think that when it comes to businesses, as a company that's more in the TradFi space, you usually have two bank accounts, and you need to manage what's happening inside those bank accounts. Everything runs on the same rails, right? When you suddenly move and you start working with crypto on-chain, different exchanges, you suddenly see a totally different movement of data, which is actually the assets, right? So to account for that and actually reconcile these transactions, understand what happened each and every transaction, and then understand how to build a cost basis and start doing all the accounting and taxes, it becomes a total nightmare and very difficult to scale. And then let's take Walmart, for example, right? They have, I'd say, 3 billion transactions that happen every year. They have a finance team of like 1,000 people. We have a customer that has the same amount of transactions, I would say, on an annual basis, with 3 or 4 people on the finance team. And it becomes very difficult to manage. I think that today what we are seeing is that you really need a specific tool to manage all of that data for accounting and audit and taxes, of course.
Yeah, well, if you're a fintech company, if anyone is out there listening,
yeah,
this could certainly be an opportunity for you. I want to talk about the market in general. What do the trend indicators indicate what you're seeing at CoinDesk, because it really has been an interesting start to the year.
It has been.
Particularly the last week, what's happening in some of the products like Bitcoin.
If on January 11th, when the spot ETFs were launched, somebody told you that by March 20th, Bitcoin would be trading at 64,500, you'd be happy. Of course, when it gets there via 73,000, people are terrified, right? Our trend indicator, which actually will feature a new product launching tomorrow, an ETF, so keep your eyes peeled for that, has been indicating a significant uptrend for the last 50 days or so, up until 2 days ago. So it's reflecting the fact that the prices have come off from that all-time high, and we're kind of in a wait-and-see mode. Still in an uptrend, but not as strong as before, and we'll see where we go from here.
I know you're launching something new tomorrow, but do you think the ETF honeymoon is over and we're kind of like on to the next product of the day?
It's hard to say. I was looking at the numbers this morning, and we like to look at these numbers in terms of Bitcoin rather than in dollars. So the new inflows into all the ETF products has been a little bit more than 200,000 Bitcoin. When you think about how many Bitcoin are issued by the network every day, it's about 900. So that's about 60,000 Bitcoin over the period that since the ETFs have been alive. So 200,000 in demand, 60,000 supply. Very easy to predict that kind of demand coming. So you can see that nobody wanted to stand in front of that demand swell over the last couple of months. The last few days, there have been net outflows from the ETFs. We don't know if this is permanent or if it's the honeymoon is over or whether it's just a lag before another wave of adoption. But that's a very sensitive topic for the market right now. They're watching those things very closely every day. We hit and broke the all-time high. That was another thing that was kind of sticking in the craw of the market. We're looking at the halving coming up next April, right? When that 900 number goes to 450 and the economies for the miners change, and there's a lot of psychology around that event. We just had a fairly, it looks like, benign Fed announcement that the equity market seemed to like. Of course, with Bitcoin, we look at expectations for real interest rates, so how much higher nominal rates are than inflation. If that number gets bigger, that's a challenge to Bitcoin. If that number gets smaller, Bitcoin kind of likes that. So I think we're moving out of this honeymoon period has certainly been digested. Let's refocus on macro. Let's get through the halving, and let's see how adoption works.
I just want to add to that, like we're talking about the Bitcoin ETF, but I think we should also look at what has changed in the market, the fact that there's actually this kind of ETF available, right? We're going to have the Ethereum ETF that's probably going to come soon, hopefully this year. I think it's also going to cause some kind of waves in the market.
It should, and the ETH ETF, and I love hearing about a stablecoin project, and I love hearing about taxes. I'm sure that many digital asset holders are going to maybe enjoy paying taxes this year for the first time, when that hasn't been an issue for them. But more stablecoin activity means more activity on Ethereum or other smart contract platforms, and that's a whole different investment case. Then you think about the staking rates that can be attached to Ether, which a couple of the ETF applicants have added to their applications. That might slow an already kind of slow process. We'll have to see. The big question is, will investors, the mass adoption crowd, be willing to learn a whole second investment case for Ether, and then will they be exhausted, or will they want to learn about Solana and about Chainlink and about all these others? We think they're just going to say, give us the index and pick the winners for us. Right. And that's why we have our CoinDesk 20 index, which does exactly that. I'm
very optimistic about this ETH ETF, and I want to say that what we've seen is that many people want to get some kind of exposure to Bitcoin and also to Ethereum. And one of the things that are holding them back, also with companies and organizations that are more TradFi oriented and different institutions, is that taxes. Like, they don't know how to handle it. And then suddenly they can get this exposure through an ETF, right? And that is something that they know how to handle when it comes to the taxes and to the accounting. So it kind of works together.
I couldn't agree more. There's going to be that crowd, that sort of giant Venn diagram of people who want exposure to the space. There's crypto native people in the middle, like where's going to be the interest point? Probably Ethereum is going to be easy. It's a very easy investment case. The stable coins in your business, are they mostly Ethereum-based stable coins, or are they on all different smart contract platforms?
No, almost no Ethereum. We're actually pretty shocked when we see an Ethereum transaction. I was going to make a comment that I hope the fees on the ETF are lower than Ethereum network. So I think that for a lot of the stablecoin transactions that you see now, they've moved to low-cost chains.
Right.
I think Ethereum has a lot of work to do to really get the pricing and the fees under control.
Right, and the recent upgrade in Ethereum, the Dencun upgrade from last week, tries to address that, but in a very intermediate way by moving transactions up a layer. What are the most significant layer ones that you see your stablecoins trading on? Is it Solana? Is it all over the place?
It's Tron.
It's Tron, right?
I had a feeling,
It's,
Africa,
there's more liquidity for like USDT on Tron than there is on Ethereum, right? And it's it really just comes down to fees. I think, again, when we're talking about the sort of difference between a speculative use case and a practical use case, what people care about is, I need to move money from point A to point B. How much is that going to cost me? Rather than, oh, we're going to the moon, so it doesn't matter, what I pay in fees.
But people need to understand this. I'm anything that delivers more digital assets to more people in the United States is, of course, a good thing.
Yes.
Ethereum, unlike Bitcoin, has competition, right? It's the major, it's the oldest. It doesn't mean it's ultimately going to win. And I think when people get that, they're going to say, what else is out there? Maybe you can just put a bunch of those together and the winner will kind of present itself.
It's funny you talked about the stable coins. I had to pay somebody did a project for us with USDC on Ethereum, and I had to pay him $100 worth of USDC. The gas fees were worth $100 also. And I was like, okay, like I was so bullish, and I was like, the whole use case of paying with stable coins that you aren't dependent on anyone, it just moves very quickly. But then these fees kick in, and you're like, no, I just like missing the whole point. I'd rather go back to bank accounts or layer 2s or Tron or any other network out there.
Yeah, it's super interesting. There's a huge opportunity right now, because I mean, look, stable coins do more volume than Bitcoin right now, right? I mean, the volumes are massive, and I think there's a huge opportunity between the Ethereum fees being out of control, and then now Tron has made changes to its network where they're essentially punishing stablecoin smart contracts, right? And so if you're using USDT on Tron, you're paying, I mean, almost 10x what you used to pay because of the way that they've changed the calculations on that. And so I think that there's a huge opportunity for, like you said, some of this, competition, quote unquote, to Ethereum, like Solana and these other low cost chains.
And I think it's a great point that you bring up, whether it's Ethereum or another underlying ETF that the wrapper is built around, because one of the things we hear is, oh, there's no fundamentals with Bitcoin. It doesn't have, price to earnings ratios and so forth. But there are, based on the conversation that we're having right now, there are fundamentals that do underlie the movement of these.
Ethereum is, and all the smart contract, they're like an app. There's so many metaphors that you can come up with that resonate with investors. It's an app store. It's a little mini Nasdaq 100. It's the future of finance. It's you can go on and on. They're all accurate, right? They have growth patterns. There's a growth element, but they're going to be winners and losers. And fees security is number one, right? Trust and security are number one and number two. But then fees come closely after that. Speed, I think, is probably fourth after fees, right? And so there's a race for that. Ethereum is doing it by building on top of itself, building a second story of higher processing and lower fees. Others just start out being faster. So the ETF, it ought to get approved because there's no reason it should not be approved. We think investors are not going to follow the path that has happened in Europe, where you have a bunch of single token ETPs and people just get confused because, again, there's that Venn diagram of people who know crypto, people who can only invest in ETPs. It's pretty small. If I really, really want to have Cardano or Tezos or Solana, I'm probably just going to buy the tokens.
Right. Let's talk about that for a moment here, global regulatory trends and their impact on digital assets. I feel like one of the next hurdles for more mass institutional adoption is being able to get some sort of cohesion around it, because there's different approaches to different countries and how they view it.
Yeah. I mean, I think, for what we deal with on the African continent, I think over the last 18, 24 months, we've seen just a massive sea change in the way that the governments and regulators view the space. Whereas, before that, it was still too new, right? And there just wasn't enough education, there wasn't enough information that these regulators had digested around the industry. And I think now that's changed, right? Now there's, look, you can't go anywhere without hearing about crypto now, right? It's all over, whether people like it or not. And so I think regulators have come around to that. And so in all of the major markets on the African continent, you've seen steps towards regulation that actually promotes the industry, right? Which I would contrast to what the U.S. is doing.
Right.
And so in Nigeria, South Africa, even in Kenya now, there's either bills going through, or there's regulatory guidance from the appropriate regulator for digital assets and virtual asset licensing.
Is there a way to quantify the economic growth now that you're able to do these cross-border payments? Are you able to see it locally, even just anecdotally on the ground, that how they're building businesses and economies now that there's an infrastructure to do so? Have they quantified that?
I have to imagine that they're doing that work, right? And I think that's part of the reason why you've seen such a positive trend in the favor of the space, right? Is this is an industry that helps people and helps businesses be able to function in parts of the world where dollars are scarce and banking systems just aren't effective. Right. And so, for companies that are operating across Africa, right? You're talking about the fastest growing continent, the fastest growing middle class, fastest growing consumer class, 1.3 billion people with a median age of 20. Right, so I mean, it is just a booming continent, and so for all these businesses that are either operating there now or trying to operate there, stablecoins are giving them a lifeline to actually be able to do that and to play across borders.
Yeah.
I think like when you talk about regulators, we are in touch with regulators all over the world, and we look at emerging markets. Usually, they are so welcoming, and they want to talk and learn and see how they can actually leverage it, because at the end of the day, it impacts their market and their GDP positively, right? As you say, we can power different companies and organizations that will affect the whole economy. What we saw usually with more Western countries is that the regulator was very defensive, right? They didn't really want to talk about crypto. They were trying to say, no, this is a scam, or we don't really know how to work around this, and we prefer to ignore it for a certain amount of time. I think something also with the ETFs, by the way, changed. You can see that regulators are suddenly educating themselves, and they want to talk to the companies, people that have boots on the ground, and see what is actually happening around crypto and how they can accommodate many of the transactions and assets and show that they are more welcoming towards that kind of asset class.
Yeah, I mean, particularly if we want to maintain our leadership role in the capital markets, all we talk about is digitizing economies and providing access to all and democratizing the products that are out there. But we also need to be ahead of the race when it comes to capital formation, because it is taking on alternative forms as we speak.
I completely, to echo your point, digital assets is the first asset class I can think of that started with retail, right? It started as a hobby. Institutions don't have hobbies, people do. So people were in their basements with their ledger sticks and computers and digging through closets for old hard drives and things like that. It's exactly that group of people, that cohort, that regulators are most eager to protect, right? They want to protect the population because the population votes, the population, is the biggest number of people. And so the regulation has, I think, the more it drags, the more it fails to protect the cohort that's most important. So accelerating regulation and close attention, I think it was lawsuits actually that started to spark the sea change over the summer, but now we're in a stronger position than we were before. We're still miles behind, right? We have regulated products on 2 assets out of thousands, one of which is under competitive pressure right now. So we have to continue to accelerate. There are other countries which are already doing it faster in a very controlled way. I'm meeting with regulators in Hong Kong next week. We were meeting with regulators in Europe later in the summer. They're happy to talk. So the pace has to continue to be high. The demand is clearly there, right? There's so much demand squeezing into one ETF so far. Can you imagine, when there's a proper investment palette? The investment case has been made. So yes, we cannot give up on our resilience to keep moving forward.
Actually, that's a great point. If you think about the fact that competition between countries is actually moving regulation forward, right? Because if the US will be very difficult with crypto companies, they'll just find a different place, right? You can see, I think it was a few months ago, many companies were starting to open offices in the UK, right? Because they had a few changes in how they look at crypto assets. You can just see them opening offices every day, a new announcement, at least on LinkedIn and different social media, opening offices in the UK. So I think competition will actually force the regulators all over the world to be more competitive and more fast in how they accommodate this asset class.
All right, and we'll end that on a positive note. Appreciate the insight, gentlemen. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.